Nissan, once a titan of the automotive world, is facing a serious crisis. The company is burdened with debt and profits are dwindling. This financial instability casts a shadow over Nissan's global operations. Like a tired old engine, the company is sputtering. It needs a serious tune-up or it might break down completely. The situation is quite worrying. Nissan's debt is a heavy weight on its shoulders, making it difficult to invest in new technologies and models. This lack of investment is reflected in their aging lineup, which struggles to compete with fresher offerings from rivals. The decline in sales adds to their woes. Fewer cars sold means less revenue, further deepening the financial hole. It's a vicious cycle that's proving hard to break. Something needs to change, and fast. In the next sections, we'll explore the specific challenges Nissan faces in key markets like the US and China. We'll also compare its struggles with its main competitors and analyze the impact of global auto industry trends. Buckle up, it's going to be a bumpy ride. The American market, once a source of strong sales for Nissan, has become increasingly challenging. American buyers are spoilt for choice, and Nissan's offerings haven't kept pace with the competition. Their SUVs, once a strong point, are now overshadowed by newer, more stylish rivals. The shift towards SUVs and trucks in the US hasn't helped Nissan. While they do offer these vehicles, they haven't captured the American imagination in the same way as domestic manufacturers or even their Japanese counterparts like Toyota. Nissan's struggles in the US are a microcosm of their broader problems. They're losing ground to more agile competitors and haven't adapted quickly enough to changing consumer tastes. It's a recipe for disaster in the cutthroat world of car manufacturing. The American market is crucial for any car manufacturer hoping to be a global player. Nissan needs to find a way to reignite the American passion for their brand or risk being left behind in the dust of their competitors. In China, the world's largest car market, Nissan faces a different set of challenges. The rise of domestic Chinese automakers has changed the game entirely. These new players offer vehicles tailored specifically to Chinese tastes at price points that Nissan struggles to match. Chinese consumers are increasingly drawn to the value proposition offered by domestic brands. These brands are often seen as more in tune with local preferences and are aggressively expanding their electric vehicle offerings, a segment where Nissan has been slow to adapt. Nissan's joint venture in China, while initially successful, is now feeling the pressure. The market share is being chipped away by hungrier, more innovative competitors. This is a worrying sign for Nissan, as China is crucial for future growth. The Chinese market is a battleground, and right now, Nissan appears to be on the defensive. They need to find a way to counter the onslaught from the local brands, or risk becoming increasingly irrelevant in this vital market. Compared to their Japanese rivals like Toyota and Honda, Nissan's situation appears even more precarious. Both Toyota and Honda have been more successful in navigating the changing automotive landscape, particularly in areas like electric vehicles and autonomous driving technology. Toyota, with its dominance in hybrid technology, has a head start in the electric revolution. Honda, known for its reliability and fuel efficiency, continues to resonate with consumers globally. Nissan, on the other hand, seems to lack a clear identity in this new era. This lack of a clear direction is evident in their product lineup. While they have some compelling models, they don't have a standout success story like Toyota's Prius or Honda's Civic. This lack of a halo product makes it harder to stand out in a crowded market. Nissan needs to rediscover its mojo. It needs to define what it stands for in the 21st century and develop a range of vehicles that embody that vision. Without this clear direction, they risk being left behind by their more nimble and forward-thinking competitors. One option being floated to rescue Nissan is a merger with another automaker, with Honda often mentioned as a potential partner. While such a merger could offer some benefits like economies of scale and shared resources, it's not a guaranteed solution. Merging two large, complex organizations is a massive undertaking. It comes with its own risks and challenges, such as cultural clashes, job losses, and the potential for brand dilution. It's not a decision to be taken lightly. While a merger could provide some short-term relief and access to much-needed resources, it's not a magic bullet. The real challenge lies in addressing the fundamental issues plaguing Nissan, such as its aging lineup and lack of a clear strategy in the face of technological disruption. A merger, while potentially helpful, is a bit like putting a Band-Aid on a broken leg. It might stop the bleeding, but it won't fix the underlying problem. Nissan needs to address its core issues, with or without a partner. The global shift towards electric vehicles presents both a challenge and an opportunity for Nissan. On the one hand, they were early to the EV game with the Leaf, but they haven't capitalized on their first-mover advantage. On the other hand, this transition represents a chance for a reset, a chance to leapfrog the competition. To succeed in the electric era, Nissan needs to be bold. They need to develop a new generation of EVs that capture the public's imagination, offering compelling design, long range, and affordable prices. They need to become synonymous with electric mobility just as Tesla has. However, the EV market is becoming increasingly crowded. Established players and ambitious startups are all vying for a piece of the pie. Nissan needs to move quickly and decisively to secure its place in this rapidly evolving landscape. The electric revolution is here, and it's not going away. Nissan needs to embrace it fully and commit to becoming a leader in this space. It might be their best, perhaps their only shot at a sustainable future. Nissan's current woes are not its first rodeo. The company has faced near bankruptcy before in the late 1990s. Back then, a partnership with Renault proved to be their saving grace. The French automaker brought much-needed capital and management expertise, helping Nissan to turn its fortunes around. The lessons learned from that experience could prove invaluable in navigating the current crisis. Nissan needs to be open to radical change, to questioning long-held assumptions, and to embracing new partnerships and collaborations. Sometimes swallowing one's pride is the only way to survive. The key is to learn from both the successes and failures of the past. What worked then might not work now, but the underlying principles of adaptability, innovation, and a willingness to embrace change remain timeless. Nissan needs to channel the spirit that saved it once before. History doesn't repeat itself, but it often rhymes. Nissan needs to carefully study its past, learn from its mistakes, and apply those lessons to the challenges of the present. It might just be the key to navigating the road ahead. To survive and thrive, Nissan needs a clear and compelling vision for the future. This vision needs to be centered around innovation, both in terms of technology and business models. Sticking to the old ways of doing things is a surefire recipe for disaster. Nissan needs to invest heavily in research and development, focusing on areas like electric vehicles, autonomous driving, and connected car technologies. They need to develop a new generation of vehicles that are not only technologically advanced but also desirable and affordable. Beyond technology, Nissan needs to rethink its approach to manufacturing, sales, and customer service. They need to embrace digitalization, streamline their operations, and offer a more personalized and engaging experience for their customers. The automotive industry is undergoing a period of unprecedented change. Nissan needs to transform itself from a traditional car manufacturer into a mobility technology company. Failure to do so will likely relegate them to the annals of automotive history. So, can Nissan survive this crisis? The answer, as with most things in life, is a resounding "it depends." It depends on the willingness of Nissan's leadership to make tough decisions, to embrace change, and to take calculated risks. The road ahead will be long and arduous. There will be setbacks and challenges along the way, but with the right strategy, a renewed focus on innovation, and a bit of luck, Nissan might just be able to turn the ship around. The automotive industry is littered with the wreckage of once great companies that failed to adapt. Nissan cannot afford to become another cautionary tale. They need to evolve, innovate, and fight for their place in this new world of mobility. The world is watching, waiting to see if Nissan can rise from the ashes. Only time will tell if this once mighty giant can reclaim its former glory. The journey will be fascinating to watch.